So today we are going to cover the subject of the stimulus checks in the American Rescue Act, and we are going to also broadly discuss the topic of universal basic income. And there are provisions in this bill in the American Rescue Act, that are similar to what a UBI would look like. UBI, of course, standing for Universal Basic Income, and we'll discuss what some of those issues are, some of the costs and benefits, and to start off, we're going to talk about the stimulus checks. What is it? Um, what happened, and how it will affect Americans? So the first round of stimulus is, or as you remember, it occurred last May, where Americans were receiving, generally speaking, about $1,200 in payment per individual. Around December, we had a second round, which is about $600, and then third round, which is coming up now under the American Rescue Act, that is going to be $1,400 per American. Now, one of the great things about this round of stimulus is that it's $1,400 per individual in a family, including children under 17, as well as children over 18 who are still being claimed as a dependent. So if you are a college student and your parents claim you as a dependent, you will also receive that check, or your parents would. Unlike the first two rounds, where it was predominantly limited to working taxpayers and children under the age of 18. And again, this is $1,400 for every member of the family. Of course, that amount decreases as the income passes a certain level, but we should be seeing that coming in pretty soon. Did you want to add to that?
Yeah, and along with the stimulus checks, the 1.9 trillion corona relief package actually helps out in a lot more ways, such as unemployment aid, direct payment, tax credit expansion, vaccine distribution funds, as for state and local government, as well as other provisions. So these include, as what Stu said, the $1,400 per person. There's a $300 per week for jobless aid supplement, and it allows people to be eligible for unemployment insurance up until September 6th. And also that the first 10,200 it would be for jobless benefit will be tax free. So this is only the 1,400 direct payment. It's only for people that are under 75 K for income, and it slowly phase out, and it gets get capped at 80,000 dollars for yearly income. So that also has for the child tax credit, which can increase to 3,600 for children under 6 and 3,000 for kids between 6 and 17. The bill also have little provision for the COVID vaccine for manufacturing, as well as testing and contact tracing, as well as the 25 billion for rental and utility assistance, as well as the 10 billion for mortgage aid. The third, there's also I'm listening at this out, so just in case if y'all didn't know, then this is probably good information, but yeah, so more than that, a lot of relief aid to state, local, and tribal government, as well as increase in supplemental nutrition assistance program, as well as aid to restaurant, and a lot more in order to help kind of like the American people. So yeah, so
Abs-
that's a lot.
Absolutely. So going back to the first round of stimulus, I did want to discuss what happened last time around, the first time around under the American CARES Act, and how that impacted the economy and how it helped American families. So the first thing I wanted to discuss is how that first round of $1,200, how that first round was spent. And
So, oh yes, yes.
Right. So when you look at families that are earning less than $75,000 per year, what we see here now, I'm going to zoom in a little bit here for us. Um, what we do see here is that most of that money went to covering necessities, including food, utilities, household supplies, and rent. Because a lot of families in the lower income were out of work. Many of them were either in the service industry or working in manufacturing where they were not able to work from home. So the first round of stimulus for families making under $75,000, most of that money was going into covering basic expenses. And then, of course, when we looked at families that are more middle class, middle tier income between 75,000 and 149,000, we are looking at 83%. You know, the amount decreases a little bit, still largely spent on basic necessities. And then, of course, when we move further up on the income chain, that a lot of that money is spent on savings, investments, and other non-necessity household items. All right, and did you want to add to that?
Yeah, so overall, I think this is a trend that we would commonly see when it comes to getting money for the people, especially for people that are in the lower bracket. They tend to use that money to be more efficient in like kind of like paying off their bills, paying off all these necessities because they don't have a lot of money to start with. While the people that are in the higher and upper class tend to use it towards more saving in order to build their network, and it's what they are usually typically do in order to kind of like grow their assets. It's like thinking in a way on how they could build their financial stability. So yeah.
Right.
But I wanted to talk because I mean, going back to that first stimulus check, I remember I was so excited, to get the stimulus check because I was kind of like in I had a lot of bills that I needed to pay, so I pay for that. I pay for my car insurance. I pay for like all these other necessary bills, and I think it was super helpful during that time when COVID hits because you just kind of like in like a weird state, and then the stimulus check really helped me out personally when it comes to dealing with some of the financial responsibilities that I have to do. How did it affect you, Duke?
I was just I just put I just put that money into my savings. I fortunately that money they were looking at the prior year's income, so I still qualified. And I kind of cheated out the, not I didn't cheat out the system, but I qualified because it was based on income from the year prior, not from the previous year. So I actually, what did I do with that money? I think I gave that to my family because my family, we had to close down our business for those months, and that's how I spent mine.
Yeah, and I think it's great, to have some kind of like backing in order to help, especially for people that are going through hard times. Because we all know during COVID, a lot of restaurant got shut down, a lot of business got closed down because of inactivity, and then even now, it's been a year and a lot more business has closed down around us, and I that's why like it's important to have some stimulus checks. And what's unique about this, if it's in a non-COVID scenario, maybe people can use this stimulus check in order to kind of like build their own business idea or venture into something that they would want to do. So I think that's why it's really interesting to see how this played out, especially in a global pandemic.
Yes, and if you want to share my screen here.
Yeah, of course.
All right. So I did want to discuss the economic impact of the payments to the economy. What we see with the direct payments is that it did in 2020, it did boost the economy by 0.6%. Now, these are other programs from the first round from the CARES Act in May of 2020, the enhanced unemployment compensation. Now, that was the additional $600 per week for anyone receiving unemployment. That boosted the economy by 1.1%. And by economy here, I really am talking about GDP, real GDP numbers. And then, of course, the Paycheck Protection Program boosted the GDP by about 0.8%. So we do see these numbers directly hitting the GDP. And because of that, talking about the current plan, um, that is going to also have the new plan, the American Rescue Act, is going to have an even bigger impact on the GDP than the previous plan. So if you look at this graph here, and I don't want to delve too much into it, but these big dashed lines was where the economy, where the GDP was projected to grow before the pandemic hit. And this is if you look at this V here, this is when the pandemic hit the economy. That's Q2. That's around May and June, and then it started rebounding. And then you can see it's really sluggish compared to where it should have been without the pandemic. You see that there's a huge gap right there. And now with this $1.9 trillion package, that's going to bump the economy through consumer spending, through a lot of the small business provisions and funding, as well as funding for the vaccine rollout. That's going to boost GDP up even higher than where we were expected to be prior to the pandemic. And then it's going to basically resume the economic growth and stability that we've been seeing since 2012 in our economy. So without this package, we can see the economy being sluggish and not really catching up with where we were supposed to be, at least until about 2024, 25. Now we can expect that to happen it's gonna be even higher. It's going to be even higher than the original numbers, the pre-pandemic numbers, by about the end of the year. So this is a much needed boost for our economy. No matter how you look at it, you can look at it as a way to help lower income families, or you can look at it as a way to really keep our economy from sluggish growth or even stagnation. And either side, it is a much needed boost, and it's going to have that effect on our economy. Okay.
Thank you, Duke. That was very informative, and I hope our listeners are able to, use your stimulus money towards, good things. There's definitely many ways that you can use your stimulus money, but I really think that, by giving it to the lower class income, that they have a lot more buying powers, because then once they start buying, then it become kind of like what Andrew Yang said, in terms of like a trickle up economy, where their $5 can be multiplied to become more and more and more in that, and then increase their economy in total. And I just want everyone to hear that Duke is very, well informed on the economy. I am a scientist, so not my field of expertise. So I will let him do the explanation for the economy part in this.
All right. Absolutely. And just to build on to what you were saying, with the last round of stimulus, we were seeing for every dollar that was spent on stimulus, on the direct payments, we were getting about 60 cents in additional economic activity based off that $1 spent. So definitely it yielded a lot of profit, well, not profit, but it yielded a lot of economic activities for us. And so and kept us kept the economy from sinking the last time around, and certainly keeps many families, many people from struggling. And of course, right now we do see a lot of families struggling. We do see food lines at food banks really running miles and miles, or not miles and miles, but running for miles in a lot of places in America right now. And so this additional funding, not just the direct payments, but funding for food banks, funding for mortgage relief. It's going and funding for small business relief. It's going to help a lot of families in this country. And talking about families, I did want to talk about another provision of the program, which is the child tax credit. Now, talking about universal basic income, this is seen by many economists as a form of universal basic income in and of itself. If you are not familiar, this is actually a rather big plan that doesn't get as much coverage as it should have. Um, but essentially what it is that it is increasing the child income tax credit from $2,000 per year to between 3,000 and 3,600. So for a child between the age, well, under the age of seven, no, sorry, under the age of six, a family will be receiving $3,600 in this tax credit per year. For children between the ages of 6 and 17, that number is $3,000. Now, of course, there's a cap on the family's income. It's $75,000 for individuals, but if you're having a family, you are going to be a head of household. And so for a head of household, um, that income limit is at $112,000 and $150,000 per family, per married couple. And it similar to the stimulus checks. Even if you are earning above 112,000 for a head of household, or above 150 for couples, for married couples, you can still qualify for this child tax credit. It does have an upper limit, which is about 180,000 for married couples. And the the bill does do something very unique here. And the child income tax credit in the past, that was basically built into your tax return annually. So at the end of the year, a family would file their taxes and then get that tax credit as part of that tax return, and then they would see some sort of payment if it outweighs their tax um, their tax dues. Now, this bill, where it differs is that it's going to split up that payment, and families are going to be receiving $300, or between 240 and $300 per child. Like I said, it's 240 for families with children under between the age, or for each 240 for each child between the age of 6 and 17, and then 300 for children under the for each child, I should say, for each child under the age of 6. And that payment will come monthly. It should start rolling around between July and August, and then so you'll get half of that 3,000 or 3,600 between July and February of next year, and February, March of next year, and then the rest will be coming in the form of the tax credit as it normally does. So that is a huge boost. It's going to be a huge boost to families, especially families that have two or three more or more children, and that acts very similarly to what we should see in UBI. And for now, that provision is only going to be effective for the year of for this coming year. However, Democrats are going to try to make that more long term as a plan. So we'll be seeing in 2022, 23, 24, etc. And a lot of that is going to be based on the data that we're going to be getting from these initial payments. And hopefully, if people are spending this money well, it can boost the economy. We can see results from this, and it will provide additional data for UBI, Universal Basic Income research, because it in effect is a UBI.
Wow, dude, that's a lot of information, and I hope our audience has, listened really carefully and be able to kind of have a good sense of when these types of like the stimulus checks as well as the other, the Child Care Act, that's rolling out. But I always have a big question on the fact that, like, where would we get the money from? Because right now the U.S. is, in debt, like, a lot. So where are we getting all these money, in order to be able to fund all of this? Especially it's a 1.9 trillion amount. Is an insane amount. We haven't done anything like this for any welfare program, not that I know of. So are we going to be more massively in debt after this? What is going on?
Yes. So we do have a $22 trillion debt right now, national debt. So usually when we come out with these bills, these massive spending bills that we've been seeing the past the past year, what happens is that the Treasury they create bonds and bills, Treasury notes, um, which in layman's term we'll call it an IOU. That gets put out into the market. Now the Fed usually comes in and just buy a lot of those debts, and then they slowly redistribute that to smaller buyers in the market. Now the Fed is the national. It's not the national. It's the Federal Reserve Bank of America. The Fed is a quasi-governmental organization. It's not run by the government, but it is sanctioned by the government, and the board members of the Fed are appointed by the government, by the executive branch, and primarily speaking, the president. As we all know, the current Treasury Secretary was once the chairman of the Fed herself, Janet Yellen, and one of the more effective members of the Fed in modern history. So we're very lucky to have her head the Treasury right now because she understands both departments very very well. Now the Fed, how it has money is that the Fed regulates all the banks in this country, and it requires that hold um, banks send a certain amount of their deposits to the Fed to hold. So um, to kind of make it to simplify the process a bit here. So if you are to deposit $1,000 into your checking account, the your bank gets to use about 90% of that. I'm not sure where the rate is right now, but typically it's around 90% of the money they get to spend. They get to take that money, let someone let someone use it for a mortgage, put that money out for a car rental. I'm sorry, for a car loan, personal loans, business loans, and but the rest of the money, that's the remaining 10%, has to be held by the bank, and then the bank sends a significant portion of that to the Federal Reserve to hold, and that's how the Fed, generally speaking, that's where their reserves are are from. And of course, whenever the Fed wants to regulate money in the country and increase its own deposit base, it just tells the bank to hold more money. Instead of holding 10%, it can tell the bank to hold 12%, 15%, etc. Or if it wants to release more money into the economy to stimulate the economy, it'll tell the banks to hold less money, like 5% or 8%. So 10% is typically our, I guess I would call it the benchmark, and that's where we set our examples. But that rate does change quite frequently, and now, like I said earlier, we are looking at 23 trillion dollars in debt. And the past year, because of the coronavirus, we ran into I believe it was close to about $2 trillion in deficit. Now, deficit is different from debt. People tend to confuse the two. But deficit is just in every given year when the government spending is more than tax revenue, we have the deficit. So if the government spends $3 trillion and it's only taking in $2.5 trillion, then we have a deficit of $500 million. And then, of course, that deficit then goes and adds onto the debt that we have. And at $22 trillion, it is the highest for a lot of reasons. It is significantly high number. But for now, we have to focus on regrowing the economy, on regrowing that tax base, on making sure that every American are financially stable so that they can pay taxes, they can send their kids to school, so that those kids can can get good jobs, pay more taxes. That's how we're going to address that problem in the future.
Yeah, and I hopefully we can get more. We can be able to, make sure our economy is doing well and not, you know,
And
anyone.
we do have a correction here. The national debt is actually at $28 trillion, not 22 trillion.
Thank you, Hui. You are very informative. Thank you for
So
always.
we do apologize for that mistake. Of course, these numbers are just growing so fast in recent months that it's hard for anyone for me to catch up on.
Yeah. And the thing about the stimulus check is I know a lot of Republican was talking about, the chances or sorry, get the fact that it wasn't needed because now that we have in more and more people getting vaccines and the economies to start open up and then more states are lifting the stay at home mandates as well as the mask mandate, they're saying that we don't need the stimulus check as much. So that's why not a lot of them voted towards the passing of the stimulus bill. But obviously it passed because of our house is the majority is Democratic. So what are your thoughts on that, Ando?
So I think that the Republicans when their argument is that it's not needed. Is that the second part of that is that it's going to increase the national debt. But of course, debt and deficits has not been an issue for the Republican Party in the Trump years because, as we recall, there was a massive tax cut of $1.5 trillion to what in effect was a tax cut for billionaires and trillionaires, multimillionaires. It very only a small portion of that tax cut really went to middle class and lower class Americans, and even like the upper middle class income tax bracket was only did not really benefit from that tax cut. That tax cut just went to the ultra rich Americans at $1.5 trillion. And as number one, it had most economists agreed, whether they're conservative or liberal, for the most part agreed that it had very little effect on the economy. It did not really stimulate the number of jobs that people that the GOP was claiming it would. And this was all said before they passed the bill. Economists were saying we don't need this bill. It will not stimulate jobs. It will not create. It will not stimulate the economy. It will not create jobs. And we were in, we were in a strong economy. We were doing very well. There was really no need for that tax cut. And so for the GOP to now be saints on the issue of budget, on the issue of deficit, it's very hypocritical, I would say. And again, I do want to draw back to my projection here. One, if you can do the share screen. Yes. Again, these numbers are coming from the CBO, which is the Congressional Budget Office, as well as the Brookings Institute. Now, both parties, both the CBO and the Brookings Institute, they are nonpartisan. Nonpartisan. Brookings Institute particularly are used by both conservatives and liberals when discussing economic policies. So this is very unbiased data and projection. And as I like to point out again, we cannot resume our economic activity, our GDP, pre-pandemic without this bill. And that's what's projected by the CBO and the Brookings Institute. Again, this blue line right here, this blue dotted line is where we would be without the bill. And this green line is what this bill will do to the overall economy. And so we do need this bill. All right, On, you can close the share now.
Okay, thank you. Yeah.
All right.
I was going to say, I think, there's has been an increased trend that every time Republicans usually take office, there has been an increased amount of national debt, much more than we're to say Democratic, but maybe that's in the recent years.
Yes.
But I digress. I digress. But I'm gonna go on to the next topic, which we're talking about the criteria to receive the third stimulus check. And I talked about this a little bit earlier, when introducing the stimulus check, but The third round this time will be mainly on income. So if you make less than 57,000 a year for adjusted gross income, then or then the head of household can make up to 112,500 for married couples who filed jointly in the tax last year. They're able to get up to 14,000 per person. So make sure you check your tax last year. So you should be able to receive the stimulus check quite soon, and that you can eventually use that for all your financial needs.
And for anyone who lost their jobs last year, or anyone who has seen a decrease in their income, um, if you haven't filed your taxes already, do it now, because so that way you can, if you had made more than if you have made more than this threshold in 2019 now, and you made less than that in 2020, now is the time to go ahead, finish up that tax return, so that way you can be counted under these guidelines, and you can also get your check. And as we've mentioned earlier, it is a full $1,400 per person for everyone in the family. So for both parents, each child, and each dependent over the age of 18. And again, that was not what we saw in the CARES Act. That is the difference with this one, is that if you are a college student and your parent is claiming you as a dependent, you will also receive $1,400. It may come into your parents' checking account, so make sure, but make sure you are aware of that.
Yeah.
All right.
Also make sure that the payments would decline for people that are over, or that will phase out at 80K. If people that have adjusted gross income of 80K, or a family that has a total income of 1,600,000. So if you are above that, we're sorry, you won't be able to get the stimulus check. But this is just to help the lower income class, and hopefully to be able to stimulate the economy, just like Anduk showed from the data.
Yes, absolutely. And hopefully, if you are struggling, it's going to be a little bit of a boost to your family. Another nice thing about this bill is that it's going to keep the $300 per week extension, not extension, enhancement to your unemployment unemployment payout. So if anyone is using unemployment right now, or is getting payments from unemployment right now, you will continue to see the additional $300 per week added on. And another great provision of this bill is that it has made it so that the first 10,000, I believe it's $10,200 of your unemployment benefits will be non-taxable. Okay, so if you have actually already filed your taxes and you received insurance payments last year, you can make an amendment, so that way the first $10,000, the first $10,500, I believe, will not be taxed. So if you already made that, filed your taxes, make sure you make that amendment. Okay.
Yeah. And so the stimulus check will be sent out quite soon, since it recently got approved from both the House of Representative as well as the Senate, and I believe it has hit Biden's desk. And since it was originally President Biden's plan, we should be able to see the stimulus check quite soon, maybe even this weekend for some eligible Americans.
Yes, so the IRS and well, really the Treasury Department has been anticipating this plan. They've made plans. They've made arrangements to get these checks, these payments out as soon as possible. Of course, as always, if you have a direct deposit with the IRS, if they have your bank account in their system, you will be receiving the check first. Unfortunately, this round of stimulus, as with the previous rounds, if you are like many lower income Americans, reliant on the checking system, on actual paper checks, and not using direct deposits. And of course, we see that with a lot of lower income Americans and older Americans. The paper checks will come, but there's always a delay on them. Now, Juan, do you know what the difference between these checks will be and what the previous checks were like?
Is it a trick question?
There's no trick question, but there's going to be a little bit of a difference besides the amount of
Oh
money.
yes, is it because the previous checks has President Trump name in like in large letters, while this one
Yes,
Biden has opted to not put his name on the sorry, not Biden. President Biden has opted to not put his name on the check in order to show that this is what, the government itself has provided for American and not just the one person as, President
absolutely.
the main person in chief.
That's correct, Juan. So President Biden understands that this is not President Biden's money. This is the money of the American people, and he is a bulwark of the Treasury. He's the bulwark of American, the money of the American people, but it's not his money. So we are not going to see his name on the checks. It is coming from the American government, but it is coming really from the collective American people. So yeah.
I was gonna say, I think I saw like a presidential email from the previous president, President Trump. He sent out that this is all happening is because of him, and I forgot the context if it was because the vaccine or the stimulus checks. I'm pretty sure it was the vaccine,
It
but
was the vaccine yet.
yeah, I find it quite, hilarious in the sense that he still wants some sort of sense of control while sending all these email out to his supporters.
Yes,
Yeah.
and of course, a lot of Trump supporters are claiming that this check was the result of Trump's action at the end of last year, when at the end of negotiations he called for $2,000 payments instead of $600, which was what was hammered out between the GOP and Democrats at in around toward the end of last year. Now, Democrats were very much ready to pass that into law, to get the $2,000 checks for Trump. Of course, the GOP never really followed up on that, and Trump himself never really particularly cared to pressure the GOP to getting the $2,000 payments out. And so we were stuck with the $600. And of course, now it took a bit of work, but we are going to see the $1,400. And of course, on top of that, we are seeing the other payments, including the extension of the enhancement onto unemployment and the child tax credit.
Yeah, and for everyone that's watching and you're wondering when you'll be able to get your check via through directed deposit or through email, our team member have posted in the comments for your at the IRS website. So you should be able to click there and be able to type in your information. Don't worry, the government already knows your information, so you don't need to worry about them stealing your information. Uh, and kind of like get a good sense of when the checks will arrive and then plan your financial situations around there. So, yeah.
Absolutely. So this leads us to our next question, which is, will this lead to inflation? So now we've had a number of economists and the Federal Reserve Bank itself have said that inflation is not should not be of concern for us. It's going to be inflation will come, but it's going to be minor. It's going to be a long-term stretch, and we're not going to see any sort of surge or spike because of the spending. And really, what we need to focus more on is on sluggish consumer spending, which is what we've been seeing in recent months. Of course, because we are still struggling economically with a lot of people out of work. So consumer spending is really slowing down right now. We need to worry about getting that back on pace, getting that back on track, and we will see natural inflation, but it's not going to be it should not be of significant concern for us. And we also have, like I said, the Fed, but a few economists here, including UBS economist Alan Detmeister and uh, the infamous Goldman Sachs There's an economist led by John Hatzius also signaled that there's a low possibility of inflation. And Goldman Sachs, love them, hate them. I'm pretty sure a lot of our members here will have opinions on Goldman Sachs, but being having studied finance and being in the finance world, I would say they are the preeminent corporate body when it comes to understanding the economy and understanding monetary policy. So if they say there's don't worry about inflation, I will absolutely trust them on that.
Yeah, and the thing about inflation is like in a healthy economy, you do expect like a slow and steady inflation anyway, because then you want to make sure that, you know, your growth, there's some growth to the economy, there's some growth to the country in general. And the thing about the stimulus check is when you have buying ability, given the stimulus checks, when you have the buying ability, which usually would work if you are a lower class, you have the ability to make more choices regarding what is good and beneficial for you. So for example, there's two things I wanted to talk about. The first one is, the buying ability. When you go to the market, you can now compare shop prices. Like instead of buying 12 loaf of bread for like $5, you can buy 20 loaf of bread for $6. So that's a lot of buying ability that you have added to be able to be a lot more sufficient, to be able to get more out of your money's worth. And I think it's important to talk about that, when it comes to, getting the stimulus checks, which is, well, I personally think even there will be slight inflation, at the end of the day. And by the end of the day, I mean like a few years from now. But you're increasing the buying ability of, the lower class to be able to make their own choices instead of stuck in this kind of like poor man wave. What was it called?
The poverty cycle.
The poverty cycle. Yes, you
Yes.
you, you should be able to have have some kind of like the basic ability to get yourself out of the poverty cycle, either by increasing your purchase ability and kind of like get yourself out of debt. Because I think what ended up happening is for people that don't have money, they end up going into a lot of like loan sharks. They end up going to these like 24-hour fast cash institution, which takes advantage of the ability that they don't have any money, and then uses that in order to prey on them, make the people more poor if they don't read the fine print carefully enough. And I've seen a lot of documentaries about this, and I've seen a lot of people that have struggled personally with this. And it's important to like talk about it in order to like kind of like help the Americans but be a little bit more economically aware and get themselves out of the economic poverty. What do you think, Andu?
Yes, no, you bring up a very good point, and it does kind of circle back to our broader, you know, implications on universal basic income and poverty cycle in this country. And Senator Bernie Sanders, which I'm sure many of our viewers absolutely adore him. He himself has said that this is the biggest bill to address poverty, at least since Lyndon B. Johnson's War on Poverty in the early 70s, late 60s. So this is going to have a massive impact. Now, I did bring up the child tax credit earlier. Now, just that one, additional $1,000 to $1,600 per year per child, that is going to bring about 5.5 million children out of poverty in this country. And if we can sustain funding and use what is in this program, right, in this American Rescue Act, extend a lot of these provisions, make them long term, including the American the children income tax, like I mentioned, provisions to help help small businesses, aiding for businesses of minority-owned businesses. We can really cut poverty by about 40% in this country. We have the economic might to do that, and it's a lot of it is it's about political imperatives, and it's about political maneuvering in the Senate. Really, that's where it is at. But there is a drive in the Democratic Party, being led by Bernie Sanders, Elizabeth Warren, Chuck Schumer, Nancy Pelosi, and I know some of you guys are going to have opinions when I bring up these different names, but there is a drive to fight poverty in this country. And Joe Biden himself, having grown up in a lower and then middle class family, having been in a working class family, he talks about his father being a working class man quite frequently. He does see the issue of the poverty cycle, and he does want to empower all Americans. Where we go from there, we don't, I don't know yet, but that is really where the future of the party will be. Except we, all right, and did you want to add on to that?
Yeah, I mean, they're really good proponents. They have a lot of good proposal when it comes to deal with poverty, and there's a lot of things to, addressing healthcare, addressing all these concern things, these things, um, these things that are, really important in order to like make sure that we can lift our line, like our people that are below the line up. And the thing about it, it's the reason why I think, now is a good time to bring this issue in is because the the inflation rate has caused, like all the prices to go up, but the minimum wage still actually stay the same. And so we, if we adjusted our minimum wage from back then to now, it should be around like 20 something, 22, $23 per hour, etc. And we still fighting to make sure that we get 15, which was a good minimum rate back in like the 2000s. And so all of this in combination with, COVID and the closing of business, like it's about time, to introduce like a new revolutionary, hopefully not too revolutionary, but like I think it's a good time for the stimulus checks to come in, or at least some program of um a similar thing, some program of like kind of like a similar significance in order to kind of like help the below the line. So that's also a good time to bring up, what we were talking about, which is the universal basic income. I first heard it from Andrew Yang, who was running as a presidential candidate, which his idea was to give out $1,000 a month for all Americans. That is his plan, but it's actually been championed by Martin Luther King as well as, a few other people that I can't seem to remember. But it's good to talk about this. And Duke, what are your thoughts on the universal basic income?
Yeah, so we don't really have a lot of data on universal basic income. As I've mentioned earlier, we have seen bits and pieces of it. We've seen some small scale experiments in different countries, including Canada. I believe Switzerland had tried its hand at it in the past, but not a lot, not a lot of long-term uh, plans. I believe in recent years, or like at least in the last year or two, we've seen a small-scale experiment in Chicago, and the findings from these smaller scale experiments is that when people are given this money, they do spend it very efficiently. They do, it's being spent very well. They're not using it for they are using it number one on necessities and to really improve their livelihoods. They're not wasting it away as many would suggest. And as we've discussed earlier, there are being poor in this country is very, very expensive, right? So, for example, if you are poor in this country, if you need to buy a car, if you need to get insurance, buying insurance for your car when you live in an area that is low income, that is more susceptible to crime, your insurance rates are going to be through the roof. If you need to get a loan for it, your interest rates are going to be astronomical. Your credit card rates are terrible. While conversely, if you have a lot of money in this country, you have good credit, you can get a lot of these things for free. Your insurance, insurance for a high income area, it's practically nothing because insurance companies see that as a very low risk venture. And so, and then of course, other things like, if you get a parking ticket or you get a speeding ticket and you can't pay that right away, the fees for late payments add up, and it traps people into these cycles. And we see it, people, what should be a small payment for most of us, or even for those individuals, because they can't make it on time. um, you just cannot add you I'm sorry, you, just because people cannot make those payments on time, because of course they have to pay for food, they have to make sure that they're not getting evicted from their homes, they have to make sure that the heat is on, they are not able to make these payments. When the late fees come in, when the interest rates are getting added on, it really hurts them very hard. And spending, what should have been them spending $200-300 ends up being $1,000, $2,000, when all these interest and rates add up, interest rates and fees add up. So being poor in this country is really expensive. And if we can get people to stay out of that cycle, so that their minimum requirements are met, that will make a huge impact.
Yeah, and then not to mention, people even in middle class, we have Costco, we have Sam's Club, and people don't have money to go buy stuff at Costco and Sam Clubs, which where you can buy bulk deals for a lot cheaper. So it's so expensive to be poor in America, especially with like the amount of very little help that they get from the government, as well as the many people that says, oh, you shouldn't give them money because they're going to spend it on drugs and alcohol. Like, no ma'am, they're going to spend it on food first, because I'm sure they're hungry, and then housing and all their bills that they need to pay, all the things that they need to do. And even if like the alcohol and the drugs, and I think that's a stereotype based on a lot of movies, as well as in poor community of colors, you see a lot more presence of alcohol, like institution, only because you want them to again make bad decision. But overall, that's the whole thing too. And the thing about it, we don't even have to mention the lower class. We can talk about the middle class, people that are just working day by day example. And the more that the more that the issue of minimum wage comes on, and we can talk about it, we see how much we're being underpaid. For example, say $15 an hour gives you I believe it's 30-40K a year. And that itself, it's what a lot of people get paid, and they're so angry because it's not enough. It's really not enough to pay for necessity. It's not enough if your housing rent is literally 75% of your paycheck. And I think with the introduction of the universal basic income, or maybe some implementations of it, as long as you have that leverage, that's the stepping stone, you should be able to feel a lot more relief. And if you can do things that you actually want to do now, so instead of like if you're in a more fortunate position where you can pay your bills like on time, you are able to like get things that you need, necessity, you can pull your friends together, open up a business, new ideas, introduce and promote the economy. And another thing I feel like a lot of people don't talk about is the people at the lower part of society are actually the one that drives the economic part. Because for them, I was trying to talk about this a little bit earlier, but I lost track. $5 for people in the lower income can be translated to 25, because they need food, right? So they would go to the grocery, they would pay it to the let's say they go to or drive an Uber, they'll pay it to the Uber person. The Uber person will take that $5 to pay for his food for his family. The market person will use that money in order to pay for utilities. So that $5 get exponentially used in the economy, stimulating economy from the ground up. So instead of giving, I mean, obviously you can give it to the rich people, but what they end up doing is they in this mentality of trying to save and trying to gain more money in their assets. And obviously that's not a bad thing, but they have the ability and the freedom to be able to do that, while the people in the lower class are most likely can't. So the money that they can have with the universal basic income. And a lot of the examples that people have tried, like a small test in small regions of America as well as all over the world. They have shown that they use that money towards their food, their hobbies, their kind of like their bills, anything that they would need, and they mostly reported that they have achieved like a more happier mental health because they don't have to worry about money as much. Because I think if you live in poverty in America, you constantly have to think about money all the time. And that stresses you out. That makes you, I don't know, depressed, anxious. Where's my next meal gonna come from? Where am I gonna feed my dog? My dog. Where am I gonna feed my kids? Am I going to have food, or can I pay rent, or things like that? And I think it's really important to talk about, as like a way to be able to help at least Americans to be able to be more sustainable.
Yeah. So we are running a little bit out of time here, but I did want to add on to 2 points, 2 very important points that you made there on. So just chronologically, you talked about the when money goes to rich people, they just save it. And you know where they save it on? They put a lot of that
Back into the yeah, in the stocks and
in
in
the
the
stock
wrong
market.
area, so back into the
Yeah.
government.
Well, in the stock market specifically. So we've seen in the last decade really is the Fed pumping money into the economy and but how because of the way the Fed operates, they're really pumping it into banks, and then of course the people who have access to that money are the income people, and what they do is they use that money to buy stocks, and then as they do that, prices all get inflated. So you talk to any economist right now, you talk to any business person, stock values don't really reflect the value of companies anymore. It doesn't reflect, it it's really hard to draw a comparison, a line, a correlation between actual financial performance of a company versus its stock value, because there's just so much money being pumped into the stock market that if you look at a company's performance now versus where it was 10 years ago, its stock price is just ridiculously out of scale with what it used to be, and that value just does not reflect financial performance. And what people don't understand, a lot of people don't understand, is that when you put money into the stock market, most of the time that money doesn't actually go into the company to invest. When you buy a Facebook stock, all you're doing is paying money to the previous holder's stock. So if the previous holder paid $100 for that stock and you're paying $150 for it, all you're doing is giving that stockholder an extra $50. You're not giving $150 into Facebook. You're not giving $150 to Tesla or Amazon or any of these other companies that people like to invest in. You're just paying the guy who or the woman who or the person who purchased it before you. And you made them richer. And then you, of course, the goal is to wait until the next person coming after you buying that same stock again at a higher price, so then you become richer. That money does not go into these corporations. It does not help Facebook invest into AI. It does not help Amazon invest into better infrastructure. Those where those companies are getting their funding from to invest are from their consumers, are from people buying their products or paying for their products. And then the other part of the second part of your argument there is about people getting people out of the poverty cycle. And I'm going to close this up by saying, when we have a lot of poor people in this country, it hurts all of us. When we have kids struggling in school and kids who are not going to be who are going to be struggling to get into the workforce later on in life, that's going to hurt the economy. When we have people going to the emergency room because they don't have healthcare to have proper screening, to have proper care and maintenance of their health, and they're in the emergency room, just waiting life and death for treatment, that costs that that is expensive to the economy as a whole. So you know, we lifting people at the bottom up, in my opinion, lifts everyone up, and that's how we need to refocus our thinking.
Yeah, nicely put, and you go and do that. Well, thank you everyone for joining us in our discussion today. I think I feel like the only reason why I wanted to talk about this so much because I'm really into the idea of the universe basic income, and I think it could be really helpful for America, and it's very interesting to see it gaining a lot of traction, unfortunately because of the COVID situation, but also because people are starting to realize that this might be a good way to go. And with that, thank you everyone from Kom Nai Kom Bit. I'm Tran.
And Duke starting out.
So we will see you guys sometime soon.
All right. Good night,
Bye.
everyone.
Good night.